All right, so I'm kind of new to Twitch, guys, so just giving you a heads up. This is all new to me, so please bear with me. I'm probably just gonna make a screen exclusive for you guys. I'm not sure how to do that, but I think I think this is how it works now. Yeah, cool, awesome. All right, so you guys can hear me. Just want to make sure everything is okie dokie. 78 viewers. My goodness. My goodness. All right. All right, boys. So I've decided to make this more of a free stream today. I want to see how much attention we can muster. Got a couple things we could talk about. A lot happened overnight, and yesterday was kind of a euphoric frenzy, and I think we can talk about this. I want to move away from the supply-demand repetition. I want to see how many people are actually in this stream, and take it from there, really. So once again, I'm gonna stay away from my lesson plans. I want to keep that more exclusive, and today I just want to kind of do a free stream, both for Twitter and for the Discord. We're already over 100 viewers. This is getting exciting. So yeah, I'm just gonna post a separate link on my Twitter and see how much people can show up to this. Streaming live. Give me 1 second, guys. All right. So let's just jump right into it. See what I missed out on. I've been pretty out of the loop for, I guess, the past 12 hours. Just, made enough money. Took a lot of small little scalps, usually for altcoins. Suggestions by other members, none of my own. Still holding Litecoin. Stopped out on Bitcoin Cash, rightfully so. Profit's profit. I'm not too attached to these. But yeah, we had quite a nutty day yesterday. I would say 10-12% all across the board. Quite exciting stuff. So let's jump right into it and take a look at some of these. So as you can know, or as you know, I took a long on Filecoin yesterday and ultimately got stopped out at a loss. As you can see, this thing's a complete scam. Had a humongous pump and just completely retraced and actually went and hit my my stop loss, which is right around $29. So not a good time for me yesterday. Small loss, and the Bitcoin Cash made up for it, no doubt about it. But yeah, very, very lackluster pump here. As you can see, we talked about this a couple other times. There's just no volume. And if you want to trade and catch these scalps, you need volume. So this is a live example of what it means for no volume. This was just someone closing a short. It has to be someone closing a short, because right after that, no interest, just completely bled out in full retrace. And as we could see, not enough juice to even make it over our EVMAs. So yeah, be careful in trying to catch these breakout pumps. I know a lot of people got really, really, really excited yesterday, and it's fun to get excited, but it can get dangerous. I really, really want to take a look at. I can't believe Bitcoin's not going to give me my fill. I can't believe it. It seems like a lot of people are bidding this R3 line here. Just slightly above my EVMAs, which is very, very greedy, I must admit. But as you can see, almost a V recovery here. Just looks like we're ready to continue on, despite what the funding is, despite what signs we're being told. Every dip gets bought, and that's exciting. It's exciting. So I'm just kind of hopping in and out of the chat here. don't really have a dual monitor setup today, so if you don't see any action on the screen, it's just because I'm looking back into the chat and seeing if anybody has any questions or would like me to address anything. So you know, forever waiting, like Pablo Escobar, sat in the pool, waiting for some sort of miracle wick. I don't think it's gonna happen anymore. I think we've made up our mind. But I'm still leaving him there just because, you know, the market is pretty nutty and anything could happen. And I think there's a lot of buyers down here if slightly above on this R3 will not be enough. So Bitcoin, honestly, guys, looks great. On a 4-hour time frame, looks great. On a 1-day time frame, I mean, guys, this should be very telling that this is getting bought up. I wouldn't be too greedy, like I have been in the past. You know, this is just no real good longing opportunity here. But yeah, this wick is very decisive that people will buy Bitcoin at a discount. The mania has definitely arrived. So I want to take a look at Bitcoin Cash because this too. I took a long yesterday through suggestion of someone else around 272. And yeah, you know, we got stopped out at around the 295, 290 mark. So this actually looks quite good. I want to see the daily close here above my R2. That would be really, really bullish to me, honestly. You could almost, you know, depending on how many people are here that saw my last stream, you know, we could just continue up from here. Just, you know, creating a nice supply block here. Seems like a lot of people want to bid here. So it's quite interesting, actually. Bitcoin Cash looks ready to break out. As you can see, we ran into some selling interference here. As you can see, this looks like an excess amount of supply, and that's why we broke down. You know, we came back to test it up here, couldn't even make it, broke right back down. But, you know, this is a nice supply block here. And that's where we're looking to pass by right now. In case you haven't noticed, we're kind of stalling right where you would expect sellers to be. So idea would honestly be, if there's an excess of demand here, we should just, you know, sell off for a day and then just kind of break out and touch the next amount of bids or asks, I should say. But yeah, majors look pretty interesting. I know people are going to want me to talk about this, so let's talk about Ripple. Let's see what's going on here. Yeah, this is a very, very aggressive buy. Honestly, guys, this volume right here, it's quite incredible because I know people that are really, really into Ripple. We're expecting this for a very long time, and it finally looks like it's ready to make its move. Am I in it? No. Is it a mistake? Probably, but I'm not getting in here. It's just I'm not going to chase candles. It's just not. It's against my system, right? My system is to wait patiently for the best valued buy, right? I want to bid where big players will wait for days and days and days, and they won't feel influenced to take a trade. I'm glad to see everybody's liking this method a lot better. From what I could see. A lot more people, a lot more bandwidth, so that's really good. JMac, you're asking me what's the R charting tool? This is a pivot point standard, and yes, to answer your question, it uses the Fibonacci. It uses the Fibonacci setting, so I'll just double click on this so you guys can see it. Once again, pivot points are usually mostly for my scalp setups. And they also just give me a bit of insight on, you know, what I can expect to see pullbacks, when I can. It's just really an extra informative tool for me. It's always good to have some Fibonacci's on your charts just to see where everybody might be looking to bid. We can remove these lines for now. But yeah, impressive breakout here. Definitely looks decisive. You know, just completely broke through our recent highs with almost no effort. So you know, Ripple may be very on its way to one of those parabolic rallies. It wouldn't surprise me. We've seen it before, and it happens really fast, really quickly. But you know, I'm not interested in bidding these, right? Because it can get really ugly really fast. But yeah, definitely looks promising. If you bought the 25 to 20 cent zone. I wouldn't sell anytime soon. Definitely not. $589. Honestly, you know what? I don't count out anything anymore. I think it's a long shot. Let's try getting to $1 first. Man, 589. I gotta shake the guy's hand who came up with that prediction. I really do. Um, but yeah, don't count Ripple out. I'm not laughing anymore. But 589, that's insane. Maybe, you know, I don't. I'm not gonna sit here and encourage that, but the meme is very well alive. As you can see, it's one of the only ones that are performing today. It shows you significant strength. Ethereum, man, wow, this looks ready to go nuclear, man. It just looks like it's a lagging Bitcoin. Man, this looks exciting. I mean, I would need to look at more complex, like more data, but wow, it's looking like some exciting times, boys. I got to admit, it's wow, you know, just looks absolutely ready. It looks ready. It really does. You know, people have been buying Ethereum for a while now, so power to the people. You guys deserve this. I'm actually not a holder of Ethereum, and you know what? It's one of those situations where I wish I did. I never saw an ideal moment to buy where I felt it was, I was getting more bang for my buck. I mean, ideally, the next place I would look to bid. Oh man, this is a really bullish candle, guys. Like I must emphasize this. This is juicy, but really, ideally, what I want to bid is right here. You know, I would definitely want to bid here at this point. Do I think we get it? I don't know. That candle's looking nice, and we're getting close to a weekly close, right? So I want to see what that looks like. Oh my goodness, this looks nice, guys. Nice little double bottom here. It's Ethereum looks nice, guys. If you're in from low, I definitely would take my chances with this. I wouldn't set a stop too tight. I think this can run over the course of the next year or two. I just wouldn't be looking to get stopped out of a trade like this. Definitely not. Do I see any demand zones on kind of like a daily, weekly time zone? Not really. I think that ship has sailed. Man, it's gonna be tough to time when to get in, and this is probably where the inexperienced traders will make a lot of money, just because there's no fear for them. They've not been wrong. They're just gonna keep adding on every dip, and it's all fun and games until the party stops. But man, for me, the ideal zone is really just this R3 line if we ever get it. I mean, that would seem like a really nice entry. I would have to check the funding as well, because if you want to take a futures trade on this, it's funding's going to play a big role in this. Yeah, if exchanges start paying holders, not holders but sellers, to start distributing, it's it's going to be a very decisive point. But man, this looks nice. Ethereum looks nice. It looks like we're just repeating this nice little markup here, which is what you want to see in this market. Just shows health. It's you can almost expect this, like sideways. You get the gist of it, right? It's the markup patterns in crypto are very, very, very straightforward and to the point. I mean, if I can go down a bit here, going back to Bitcoin, kind of to see that constant, markup, sideways, markup, sideways, markup, sideways. You kind of want to see that. It's classic Bitcoin price action when it's rallying. You got to take these trades honestly. Man, this is an aggressive bid. It's an aggressive bid. I can't believe I'm not getting filled, guys. This is really, really upsetting to me. So I'm just reading comments here, guys. Just give me a moment. Don't want to miss anything. Pivot point standard. Would I recommend learning technical analysis and chart reading? Absolutely. I mean, technical analysis can give you a lot of edge. A lot of people swear by them as the only thing they'll pay attention to, and it's what works for them. TA is never a bad thing to learn. It helps you find an optimal entry, and there's a lot of things to back it up. It doesn't mean it's going to work every time. I think the most important thing in trading in general is always going to be how you manage your risk, and whether you take a smart or a dumb bet, whether that's in confluence with your TA, whether it's in confluence with Ripple airdrops. Like, honestly, guys, it's always about how you manage your bet. You gotta know that if you're wrong, it's time to cut your losses as quickly as possible, and when you're right, to pay close attention to it. TA definitely helps. Knowing more about what you're looking at, and finding ways to justify that is always a good plus to have in your repertoire. So no, I would never ever tell someone not to learn TA. I think it's very important. But essentially, it's more about market psychology and getting over this idea that when price drops 30%, that we're looking to sell. No, we wanna look to buy, right? Because it's I say this this example a lot with people that are just joining us. The example is kind of like walking into your favorite retail store with the idea that you need to buy a T-shirt or something. If it's retail price, you were planning on buying it, right? But what happens when it's 30% off? What are you gonna run away? No, you're gonna jump in both feet and you're gonna buy that T-shirt. I know we're talking about an asset and consumer goods, but it's kind of the same thing in the sense that if you're getting a 30% off rebate, you're gonna want to buy that at least in the short term, because someone's gonna definitely want to buy it at a higher price. Like, if for whatever reason we just fell down here into this demand zone and just came up and fizzled up and saw weakness, well, this right here, this is a profitable amount of money to be made here. It's a nice little 7% trade here, and you want to take profit on that, especially when you're longing up here, right? So all this to say is, it's market psychology is much more important than TA, in my personal opinion. Because we can draw triangles, we could draw trend lines. Everything will always fit your bias if you're looking for it. What won't fit your bias is the panic that you're seeing on the screen. When you see a 30% candle just kind of roll over like that, I mean, that tells you one thing and one thing only. Emotions, panic. That's people selling off as quickly as they can. It's that's more of a tool than anything. You want to get over this fear of buying something that's already down 30%. If anything, you want to buy it. You don't want to look to sell after a move to the downside is over 30%. And it's the same thing after a price marks up 30%. Why would you buy there? Look for the next best optimal zone to buy. Don't take that chance buying something that's 30% up without knowing how price will react 30% higher. For all we know, this is way too expensive, and you're going to have a lot of people thinking that's a good area to sell. So it's very, very important to understand the chaos on the screen that we're looking at. It's I say this all the time. It's nothing but chaos. And you got to find the best moments to buy in the madness. It's very straightforward, and I wanted to create more examples for you guys, but I figured there was so much action that happened last night and the whole day before that we can actually look at some live examples. So like, once again, for all the new people that don't know how I trade a very supply demand strategy. And supply demand is where you see price mark up, sell off for a bit, and then mark up out of the zone again, which shows just an overwhelming amount of buyers. So just live up, like, as a trade, if I'm not in something that's trading like this, at least for a scalp, meaning just a short-term trade, I want to catch a wick that wicks into here, because I know there's an unfilled order here, and I know that the response from hitting this order block will just instantly, well, in most cases, I'm not going to say this guaranteed, but in most cases will just instantly get bought up until we run into the next wave of sellers. But in between this is money to be made. It's not necessarily holding for the long term, but like, trading this is a nice 7% bounce, and you want to make money off these little interest zones where, big buyers are going to step in here and probably will push price up before falling straight through. The reason why it moved away so quickly is because a buyer over here was unfilled, and just too much being bought here that price gets moved up until where there's a new amount of sellers. So this is a very, very important concept to understand, because it changes the way you look at a chart. You know, a lot of people overcomplicate this simple method of trading. You know, you don't want to look for something that's complicated. You want to look for something that's fairly simple. Like I can almost see, you know, kind of like this happening on EOS. But I know it'll hit here, and if it hits here, we can at least see some relief. At least I think so. I mean, this would indicate that there's a buyer that wasn't filled here, and I don't think he pulled those walls. It wouldn't make any sense. That's why we're going back down to test the demand. But you see, you definitely wanna catch a wick in here, and even if you don't get it, you know, if you want to play it safe, you long the top of the box. You put your stop at the end of the box, because that would indicate that his order is filled, and after this is all stops. So, you know, a nice ideal trade to take here would be into this box right here and hope for a relief bounce, catch a nice 6-7% move. And for all we know, we might not even get it. It could be so bullish that we just continue. So, you know, let's look for more examples. But this looks like a very likely scenario for something like EOS. I mean, you know, assuming volume kind of like just dies down here, we can almost see a tap into this demand before continuing back up, and that would be a very safe trade. As far as you'd feel very comfy if we moved away from this box a good 7-8%. A nice cushion, a nice place to put your stop above your entry, right? Just slightly above your entry. So that's one thing to look at. I'm just gonna keep reading the chat, so bear with me, guys. Yeah, we got 100 viewers. Well, 98. Sorry, 106. That's incredible, guys. Thank you so much. Can I go over identifying supply and demand zones? Yeah, I mean, I could try my best. A bit unprepared for this. Very sorry, but yeah, let's try and look live for some supply demand zones. Now, I went over this last time. The reason why I'm constantly going over, how do I say this? Examples that I did in the past is just because I know a lot of people weren't actually able to see my screen, so they were just hearing me talk, and you know, it's very, very hard to follow. But I'll go over this example again on Litecoin, where once again we identified a supply demand zone, and what is a demand zone and how is one determined. So this is probably the best example we've had in a very long time, and this is an example right here. So this red rectangle would indicate an unfilled buyer. Meaning a buyer that was partially filled, but his order was just simply too big and there wasn't enough sellers, so we just marked up into the next wave of sellers, right? But as you could see, so a demand zone is created when price pushes out, consolidates very briefly, and then pushes out again, right? This indicates that there were some sellers here, but there was way too many buyers, so we just went to go touch the next supply zone. Now the next supply zone, how do you indicate a supply zone? When we stop going straight up. Pretty much. When we stop going straight up, it means we found some sellers and we're going to battle it out. And if it's enough, we continue to mark up. If it's not, depending on who's selling up there, can kind of sort of zigzag and then eventually tap back down. So why do I know this was a crazy demand zone? Well, look at this gigantic wick right here. I placed a bid at the top of this box because I don't want to get front ran, right? So ideally, the way I take my trades is I'll take the 3 candles or the 2 candles here, and I'll mark the top of them as well as the bottom of them. I got a bit greedy here just in case we really wick through, and you could see why this was probably a good idea to include the wicks, just because you don't want to get entered and then stopped out in the same trade. So to avoid getting front ran, I bid the top of the box, not the middle, you know, because already catching this right here, you can almost guarantee, and I say almost, not a guarantee, you can almost guarantee that this trade is going to move really quickly away from the price. So as you can see, we tapped right into the demand zone. I'm in a trade. We instantly get bought up because, like I said, there's an unfilled order here. And the supply up here with no buyers brought us back to this order block. A market is just trying to find where the orders are, and the orders were right here. And this is decisive, and the way we are able to tell is because we found some sellers and instantly marked out. We instantly marked up, which indicates that a buyer here wasn't able to get filled. But there was also no buyers up here, which is why supply bled into his old previous order, which is why I was able to catch this trade. And as you can see, We moved right out of it, meaning this guy got completely filled. People started to front run his block, which was enough demand to exceed whoever was selling here. And that's why, once again, we moved right up. We moved right up and found the next wave of sellers. These are sellers. These are sellers. And, you know, if we really want to zoom out, for example, this kind of, I mean, it's less decisive and it's more risky, but this is kind of one humongous buy zone. And as you can see, our recent wick, well, people are front running the wick. People are front running this zone now. And just from the looks of this, it's quite bullish. I mean, the fact that we're just buying it up and eating every sell block is actually kind of crazy, and it's very, very indicative by the fact that every time we try to, just kind of crash, we have some sort of wave of bidders here, and these wicks are very, very telling of that. And these instant buy-ups, it almost looks like it's going to make a V recovery, So that's a perfect example of supply and demand. And now I'm in a trade from 68.39. I believe so. It should be 68.39, the top of this box, or something like that. Yeah, 68.38 or 68.39, and now I'm in a trade that's, look how much it's moved away from price. 25%. Now that's a fucking trade. That's how you want to be taking these. You want to minimize the downside. You want to buy where the big buyers are. You don't want to buy retail zones. These are retail zones. Someone is selling on you here. That's really what these sideways actions are really just telling you. Someone's selling on you. You don't want to trade here. Why would you take a trade here? Yeah, whatever. It could move up. I'm not saying it won't work in your favor, but this is not an effective way to trade, because one day it's just gonna. And what happens when you're stubborn and go, oh, it's gonna bounce over here? Well, now you're going against your plan, and now you want to make it back. But this is the gambler's fallacy, right? Now we're over here, and you're hoping on this to just kind of bring you back up. But what happens if it doesn't? Now you're getting stubborn, and now you're stuck over here holding a bag from up here. Just not a good time, guys. Like being a trader, you want to minimize your downside. You want to know you're wrong right away, and want to know how. The way I would know I'm wrong on this supply block was that it would have just entered and stopped me out. And it's a favorable trade, guys. You gotta put risk on the table, right? If you want to make money, you gotta risk it. But I kept a tight stop right below us, right where the supply block is, the demand block is. And if I was wrong, I was wrong. It would have costed me about 2% of my portfolio, and that's a fair enough trade for me. In return, I got rewarded greatly. And now I want to put a stop, maybe right here. I'm willing to take the chance. This is a winning trade for me, And do I believe Litecoin can continue running? Yeah, definitely. But my stop's over here. I'm not gonna leave money on the table, boys. I love Litecoin. I like the idea of it, but I'm not gonna throw money away. That's just foolish. So this is maybe one of the greatest examples I have, just because it worked in our favor, and I would say it's maybe one of the trades of the week that I've done in quite a long time. But yeah, this is effectively how you want to trade supply and demand. This is a live example of how this works. Don't think these wicks can't happen. People panic, people sell, people don't know. At the time, this could have been a full fat candle, and people could have thought, oh man, this is going to break down to S1. But as you could see, there's a nice demand block here, and it's important to spot that, because someone's going to fill here. And why are they filling here? It's just something you want to ask questions for. It's just looking and spotting, where did we move out of price so quickly, so rapidly, and how do I get in on there? You don't want to trade this entire move up. You don't even want to trade right here, guys. You want to trade where there's a clear unfilled order, because the market eventually wants to come back to it. It wants to come back to it. I'm not saying it will, especially, this was pretty decisive that, there's just not enough selling here. There's more buyers than sellers. But yeah, that's one of my many examples. I'm just reading through the comments, guys, so if I go mute, just bear with me. What is the primary time frame you use when determining buy supply zones? Honestly, you want 4 hour, one day, I think these are the best. Look, even on, the one day, you're kind of seeing a new supply block here being built, and this is right here. And wouldn't you believe it, these greedy bubbles bid slightly above it. This is called getting front run at the highest magnitude. Absolute shambles. Like, this is the perfect example. Someone saw this unfilled order and goes, yeah, I'm gonna bid maybe just slightly above it just in case I miss out. And the people that bid, the top of this box, well, they didn't get it. They didn't get it. If they bid the wick, they would have just gotten front ran. It's almost magic, guys, that wick stops right where our supply demand zone is. It's crazy. It's live examples in front of your very own eyes. You can't make it up. So let's see if I can find another one for you guys. But does everybody understand that basic concept? Is there anything that maybe I can elaborate on that you guys might not understand? Thank you for doing. Damn, this is just too much interesting. If things are super bullish, would you place your orders a bit above the man zone since you can assume others will try to front run? Honestly, guys, when you're dealing with something scarce, probably this goes entirely on how you manage your risk. What's your risk tolerance like, and more importantly, how much money are you using that's not actually your capital? So if you're borrowing margin, you got to make sure that you're risk allocated for this. So if I'm gonna front run, okay, if I'm going to front run slightly above this demand zone, well, I got to be a bit more lenient on, I guess, my position size or how much I'm willing to lose. Like, am I going to stop in the mid wick? Because that would be a 4% loss. Someone's using 10 times margin. This could be a very bad time for them. They can lose almost half their account, So that's why it's very important to use low leverage, guys, always. I just think it practices a safe, it's a safe practice, right? You don't want to get caught 5% down, because these, especially with altcoins, it happens so quickly. So like if you wanted to front run slightly above and you wanted to keep an invalidation right at the end of this supply block, well, on a daily chart, 5% is pretty deadly. It's devastating for people that use anywhere more than 3x leverage. It's fucking devastating, guys. So like if you want to be a trader that lasts long term, you want to be using low leverage because you want to have wide invalidations. You want to trade to actually have a safe practice, and by doing this, giving yourself enough space of invalidation. Because if you're using 10 times leverage, well, this is your area of invalidation. And nobody's perfect in this world. Like, nobody's perfect, guys. This is like saying I'm taking a perfect trade and I'm never wrong, which, if you're new here, you're going to have a very bad time with this mentality. You're in it for the long run, and that's why I can't help but emphasize that when I set up a trade, it's with idea that we can just completely touch here 3-4% below our entry. Most good trades go 2-3-4% below your entry. It's only normal. It's but if you're using 10x leverage, this is game over. Half your account's gone. So when I'm posting trades, I emphasize using low leverage for this exact reason. I have to give myself an area of invalidation, but an area of invalidation isn't justified with a 0.5% move. We're not perfect human beings here. We're not robots, and like I said, this isn't predetermined. This is chaos on a screen, and you gotta leave yourself a wide enough room for error throughout the chaos. You don't want to get into a trade and instantly lose 5% because you only put 2.2% of risk tolerance. That's absurd. You're almost giving money away to the market. And I have to say something else. When you're playing versus big players, they see where your stops are. They see there's a buy order of 6,776 contracts, and then right 2.2% below it, they see there's a sell of 6,776 contracts. That's liquidity for big boys. They're going to hunt you and they're going to kick you out of your trade. But let me tell you something. If it's 5% below your entry, well, they might not want to take this chance to come and run 6,000 contracts. You're not big enough of a player. They're not gonna keep selling 6% down, but they'll sell 0.2% down. They can absolutely fetch that liquidity. They know you're gonna take a loss, and they know that's money that's coming back to them. So you have to understand that order books are seen by people, and they know right under your entry if you're using 25x, and 25x happens to be $15,000 of your account. Well, you know, for 2% below, 2% below, they can grab that liquidity, 15,000. It's the identical number. It's the identical number right under your entry. So people see this. Don't make no mistake. You're in a market where there's no filter. You're playing versus the big boys of the league. You're playing versus LeBron. You're playing versus Kobe. You're playing versus Cristiano Ronaldo. They're in the same market as you, and they will not feel bad taking your money. They will not feel bad fetching liquidity. This is what they do. This is their bread and butter. So you have to understand that you're not playing with people that are at the same level of playing field as you. You're playing with people with 20 million, 30 million, 40 million, 5 million, and here you are, the small fish with 5 to 10K. You gotta know when to step back. So that's why give yourself an adequate amount of space to be wrong. And to be wrong is anywhere saying that this big buyer right here is not enough to continue pushing price up. And that's more than fair enough justification of saying, hey, look, I'm wrong. I lost this trade. On to the next one. I'm not going to risk it and be like, oh, wait, there's another big buyer down here. I'm not going to stick around for this what if. Playing the game of what if. I can justify a trade I can justify going down 40% in a trade if I'm playing what if with myself. So the idea is, especially when you're entering a trade, is to have an entry and an exit, and don't play what ifs. Because you start playing what ifs, you go against your system, bad things start to happen. You get put in positions you don't want to be in. Don't let your emotions take control of a technical process. Very, very important. That's what's important about supply and demand, is that if this big buyer falls, so do you. You're not a whale. Your $15,000 contracts are not going to save you from year to year, so why take the risk? Why suffer another 7% down knowing that nobody is coming to save you over here? Hey, yeah, salute. You can go all the way up. And like I said, you're going to get burned one day. And that's not, like, the idea is to practice a method and to retain your capital, because it takes one bad trade and one hot head of, 20 win streaks, 30 win streaks, and then one bad trade, boom, 30%. You're stubborn, you're underwater 30%. And taking that loss, it hurts. It hurts. Trust me, it does. It sucks to build a portfolio for 4, 5, 6, 7, 8, 3 years and then get greedy and stubborn and going against your system and your plan and suffering 25, 30, 10, 15%, whatever. Anything over 5%, guys, burns. And if you haven't experienced that already, you will. You will if you don't stick to your plan. You put a hand on a hot stove, you get burnt. Are you ever going to do it again? Probably not. Probably not. So think of this as, I'm going in with an entry and an exit, and I'm not sticking around if I'm wrong. Okay? So guys, I'm sorry, I'm trying my best to read these as fast as possible. So if I just kind of just kind of get sidetracked and then come back to read, once again, very sorry. It's like my third stream ever, so yeah. Shame on Elio, man. He is quite the sniper. Definitely don't want to get in the way of that Barrett 50 cal. The guy goes in, balls to the wall, 75x leverage, and somehow just comes out on top. Don't know how he does it, but Mr. Elio is definitely an experienced trader, and he knows what he's doing. He's managed his risk accordingly. Provides great setups, man, and he might be front running. Might have to have a little talk with Mr. Elio. Would I dollar cost average into that supply block? Not necessarily. You want it to be, especially when you're high up, right? When you're high up after impressive markups, you definitely want to just originally take the trade as a scalp, low leverage. Definitely don't want to keep adding in. You definitely don't want to keep adding in. Ideally, supply demand is you're coming in with a position size and you know when you're wrong and you're not going to stick around if you are wrong. right? It's a very, very effective way of trading. It's a safe way of trading. It doesn't always hit, but it's in these markets you want to remove the downside. You just do not want that hanging over your head, because alts fall really quickly, Bitcoin crashes really quickly, markets do not close, so it's never ever ever a moment where you could relax. So it's a bit different trading crypto. You want to limit the downside as much as possible. You want to get those real value zones, because these illiquid coins will reach those unfilled buyers. You want to take that chance. You definitely do not want to get greedy with entries. The only one I'm starting to kind of come around, maybe because it's entirely a unique asset, is Bitcoin, just for its scarcity and how aggressive the bids have been. Bitcoin's an exception. A lot of these other coins have a massive supply and not enough buyers, so you don't want to get greedy with these things. You do not. You do not. If anything, you want to get greedy with the buying, not with the entry. Put yourself on the safe side. Play the defense. Um, if you're going versus big players, play defensive. Play defensive. See how they move. Put yourself under bigger players. Put yourself where the institutions, where the bankers, where the whales are buying. Do not buy the retail price action. It's going to hurt you. It's going to hurt you a lot. Jose, how you doing, man? Do I dollar cost average my bids if I'm going on a swing? Yes. I think it's important to ladder in. Sometimes, let's say for an example, what's a good example? Let me go to the 4-hour on Bitcoin of an example of where I'd want a dollar cost average in. Yeah, right here, this area right here. So because this was so goddamn bullish, we didn't really have a chance to buy in like a DCA. But when my bull signal, when my system triggered me to go long, I did not care how much further down it would go, because I would just wait for my signal to print a bear symbol. And that would have been decisive enough for me to cut my losses. But since I know we're on a larger time frame, since I know, we've bottomed out here, I'm only going to look to add the lower we go. Now, unfortunately, I didn't add down here just because, for whatever reason, I think I had lower somewhere around like 9K-ish, 9.6, 9.3. I thought we would get much lower before inevitably moving up. But yeah, I would dollar cost average if I'm preparing a swing long. If I'm preparing a swing long, like long-term trade over the next 3-4 months, I'm definitely looking to dollar cost average in on any dips we may get. I will use it for swing longs if I think I have a better value. I'm doing fantastic. Thank you so much. Do I have any majors I like to trade besides Bitcoin? Honestly, more and more I'm liking the looks of definitely Ethereum. I think there's a lot of volume showing up. I mean, there was already more than usual, but I'm liking the volume. I think I missed the boat on this one, and I might hate myself forever. But yeah, I'm probably gonna start looking for trade setups on Ethereum. I like the structure. We have a clear uptrend, and I like to trade uptrends. Personally, I like to trade uptrends and hedge against downtrends. In a bear market, I like to protect my capital, and just cover whenever I see that we're done selling. In uptrends, I definitely like to be more aggressive, just because the potential upside is so much more greater, especially in the market that we're in, right, where supply is very, very important, and there's no real earnings, there's no real use cases for any of these things that you could put on paper. So it's entirely speculative, and you're dealing more with a currency or a type of utility token, so it's going to be valuable based on what people deem it to be valuable. It's not, for example, Tesla made X amount of money this year, owes X amount in debt, and plans to finish the year at a loss. Well, that's going to affect the price of a Tesla stock. So when it comes to crypto, it's entirely speculative, and these things can run in perpetuity. It's really you trade the chaos on the screen, right? it's almost entirely emotional. So when we're in an uptrend of emotions, that's a lot of money to be made. So I'm looking at Ethereum. I like Link. I like Link. The only thing is, I think it's way too choppy. But I do like Link. I do like Link. Like, this is looking gorgeous. This is looking gorgeous, guys. Almost like a reaccumulation phase. You know, this is kind of gorgeous. Yeah, I'm definitely gonna start looking at Link again. Anything else? Litecoin. I think you guys know. I'm kind of back on the Litecoin train. I think this can go to triple digits, even $300. Again, it's a long time from here. I'm not saying, you know, all in long $84. Definitely not. It's gonna take some time to get there, but inevitably, I do believe we do see 100 to 300 just because of the PayPal listings and the fact that it's a scarce supply. I think we can definitely see some interesting price action. As you can see, the volume is blowing up on this, you know, so definitely starting to look at Litecoin a lot more. I think we're gonna have an impressive next 3 months. But honestly, man, for majors, that's all I really like to look at. I'm not a fan of XRP, as you can see. It's pulling off some intense scams right now. XRP, TRX, I mean, too much supply. Too much supply. And I don't like trading too much supply. Because there's always going to be some, you know, Houdini seller that just comes out of nowhere and decides he wants to market sell 30 million of his tokens and then ruin all the momentum it has and cause panic and fear. I just don't want to be involved in that. Personal preference. I'm not saying this is ideal, but for me, just not a good time. I recorded the session, Syncros, so it's gonna be interesting. Pretty sure you could see this after. Rego and Eli's trading style are very different, but they both work well. Yeah, I would honestly say my trading style goes a lot after Sam Sadin. That's where I learned everything from. Sam Sadin, for all who don't know, he's about a trader of about 20 to 25 years experience on the Chicago floor. Worked for a fund a very long time ago, and pretty much applied supply and demand and taught me it the best. You can definitely go check up his videos. It's no secret. Everybody that knows me knows that I live and swear by Sam Sadin. I think he's a phenomenal trader and has a very, very effective strategy. Eli's a lot more like salsa tequila, I must say. He's a really, really good scalper. I got to give him that. He's phenomenal. I know a lot of people in the group absolutely love what he does. I'm gonna keep reading. We have such a diverse and powerful group of mods, absorbing all of their wisdom. Yeah, you got some real gems. Real gems. A lot of people are giving you a lot of valuable info. Michele, man, sometimes this guy, he sees things I didn't even pay attention to, and I'm learning from him as well, believe it or not. Michele's had some crazy insight on a lot of calls. Ellie, been paying close attention. Personally, I'm not a scalper, so I don't feel very, very comfortable with that method of trading, just because it requires a lot of time and a lot of balls of steel. and I just don't have it, man. I like safe preservation of capital. If you've been here from 2017, you know how easy it is to get burnt. We've all learned our lesson, I'm pretty sure, and if you haven't, you will. It's part of the market. I don't think anybody goes away unscathed, so just expect it. But yeah, I don't like scalping. I just don't, unless it's a complete hot table and everybody's playing the same patterns. I don't like it. What's the difference between perp coins versus non-perp? Very good question. A lot of people can't answer this just because they're not too familiar with the platforms they're trading on. So non-perps are what you would consider, I don't know if you mean quarterly or non-perpetual contracts. Pretty much, I'll try to explain this the best that I can. Derivatives exchanges are contracts, right? So perpetual swap just means a contract that never expires. So it's kind of like an option. But it's not. It's a futures. So a derivatives contract is, especially when it's perp, can either sell at a premium or not, and has a fee to it or a funding rate to it. Futures is pretty much self-defined as, it's predicting the future price. So you're not holding spot, and what a non-perp is you're holding physical Bitcoin, right? So for example, I'm going to use the example of Bitcoin, right? So if I go on Coinbase and I buy $20 worth, I bought spot of Bitcoin, right? So spot means I have physical. It's funny that we say this because everything's all digital, but I bought physical Bitcoin, meaning I bought actual supply. When you're trading perpetual swaps, you're buying a contract that retains to the price that you're buying at, and sometimes they sell above or below spot. And this can do with the funding rate, the fees, how many people open the position, how many people aren't, and it's very important to understand that you're not trading physical Bitcoin. You're trading a contract essentially. You're trading a perpetual swap, and then if it's non-perpetual, you can have things called quarterly contracts, which can sell either at a discount or at a premium based on where do you expect price to go or come back to. And a quarterly has an expiration date, so price automatically sells, or the contract automatically expires at the end of its quarter. Like for example, if it's like a September quarterly or like a Q3 contract, well, that expires in Q1 or in Q4, sorry. So it has a time limit, right? So if you're buying like, usually whenever, I'll give you a better example, usually whenever these contracts, like quarterly contracts, get issued far away from their expiration, depending on how people are feeling in that moment, the price can sell at a discount. I mean, you could buy quarterly swaps for less than a price if you think towards its expiration Bitcoin will be a lot higher. So when it's time to sell them, people will want to buy them at a much higher price than whatever spot is trading at, which is very, very interesting, right? A lot of people make money this way. It's a lot more complex. It's way more to do with trading than it is to understanding crypto. But honestly, quarterly swaps are for people that have good insight of where we will be 3 months from now, and will either sell or buy these contracts based on whether they're selling at a discount or a premium. So it's a bit more complex, but yeah, it's very important to understand what a perpetual swap is, what a spot buy is, and what a quarterly swap is. These are very important terms. As you get more into trading and understanding margin and leverage and derivatives platforms, this will make a lot more sense to you guys. But yeah, if you're trading on Bybit, for example, inverse perpetual swaps, you're buying a contract. You're not buying Bitcoin. Important to understand. Yeah, you will get paid in Bitcoin, but you're not buying physical Bitcoin. Very important to understand. Just joined the chat. Can you tell me why market buy is so bad into a trade? It's bad because you're paying a premium and you're paying market fees, right? If you have the chance to limit in, you're cutting that out of the equation. You do not want to market in ever. I think it's a rule, and I think I almost want to ban people when they tell me they market buy, because that's total baboonery. You're giving money away to CZ, you're giving money away to Ben, you're giving money away to the exchange. The exchange has no say in this. You shouldn't be paying a premium to get into a trade. Price almost always comes back to where the bids are. Marketing in is a beginner's trap, and you don't want to do this. You just don't want to do this. The only time you're marketing out is when price is invalid, is when your trade is invalidated. You want to get out as quickly as possible. You're willing to pay the premium. But this should be also calculated when you're managing your risk. If you're taking a trade, you got to take into the fact that what are the fees when I mark it out, and this should be allocated with your risk and how much you're willing to lose in one trade. I hope that makes sense, but marketing in is just a big mistake. You're already starting to trade down. You want to preserve the margin of error. You want to save it for where you can actually get invalidated. Adding $7-8 to your margin of error, for a lot of people, that's already enough to kick them out. So very important to understand. Be patient. It's so important to be patient. Don't feel like the market's running away from you. And if it does, it does. This is not a sustainable method of trading. You will get burnt one day. and you'll be stuck at that top of the wick and wondering how the hell did you buy the literal top. You know, it happens a lot. It happens a lot. So never market in, only market out when your trade is gone wrong. But it should already be set as a stop loss, market out, stop. You know, don't market out in the middle of a 10% candle. Mark it out because your stop hit. Don't mark it out in the middle of a 10% free fall, because then you're just going to sell at the absolute bottom of that candle. You will be that wick. So very important to pay attention. This sounds a lot like Chris Laurie's strat too. I don't know who that is. I don't know who that is. And guys, I'm not saying supply demand was invented by me. I give full credit to the people that, you know, effectively know how to trade this method. You know, the idea is just to make money. It's really not to say I have a proprietary blend, because I don't. I really just trade an effective strategy that works with the time I have and the effort I put in. And I think it's quite safe. I think it's quite a safe method. And I know I'm not moving the screen, guys. It's because I'm reading the chat. I don't want to get too carried away with it. But yeah. I love how you can have so many different trading styles and be successful. This is a very important key, is that a lot of people take trades blindly, not understanding why they were taken. There's really a million other ways to find a profitable trade. And what I mean by this is a lot of people see different things that, you know, will be a successful trade for them. You know, for example, Eli is not worried about this candle right here. He's looking at this. You know, Eli's looking at this right now. And his methods of trading are completely different to mine. By the way, for someone that asked me why I have pivot point standards, this is why. You could play this bread and butter, guys. Range to range, just scalping. 5% moves, 5% moves. Like, this is why I use them. They are very, very indicative of, you know, where people are looking to buy and sell. Quite interesting. And guys, honestly, a live example of a 5-minute scalp that I would love to take. Unfortunately, I'm not going to, and I don't recommend you do. But look at this supply block, this nice demand block here. You know, you can almost assume. I'm sorry, I'm getting off topic, by the way, but look, you can almost assume we just kind of roll over and just kind of, but you want to take profit here. This first sign of weakness, or it could even, you know, but we're not going to stick around for that, right? It's a scalp. We're not attached to this. We're not emotionally invested. We just want to make money. So this is a good idea. As you can see, look at the markup. You know, someone's tried to sell here, probably got filled, instant markup until the next seller. And now this seller is filling or distributing. But yeah, this, you know, might be a nice trade here. You know, entry at the top of the box, stop below the box, or stop at the end of the box. You know, that's a very, very effective way to trade. And you could do it on the 5-minute, you could do it on the 50-minute. I'm just not comfortable. You know, I find this when you're playing on the 5, 10, 15, 30-minute charts, I find they're easily manipulated by big players that know what most people are looking at. I got way off topic on this. I know someone asked me a question. 1 second. Going back to the idea of having different trading methods. Yes, and it's why I always say caution when you take blind trades, because you don't know why they're taking it. You don't know what their risk management is. You don't know, you know, what is in validation for them, or you know what info they're getting or what they're looking at. You know, and everybody has a different trading style, which is why, you know, there's no effective one solution way. It really comes down to what do you see and how are you risking. You know, like, keep your risk low always, and whatever setup you decide to take, well, that's entirely up to you. There's a bunch of edges that you can develop with enough experience and time. I really just like supply and demand, because I like the basic concept that human beings are trading, either buying or selling, and there are very, very decisive moments on a chart that you could take advantage of. You know, because like I said, a lot of people overcomplicate it. They're getting chopped up. They're getting chopped up in here. They're getting all emotional, and that's why this is constantly going up and down. And the person that's selling up here has a lot of supply, and they know people are getting emotional, and they're just gonna sell the next higher high and create this false hope so people get caught up here, and then they're gonna sell down here, and then they're gonna buy again up here, and then they're gonna sell down here. This is called distribution, and this is someone distributing, or at least thinks this is an ideal place to distribute in the short term, So it's fun to look at different trading styles, but understand why someone's taking them, and understand what invalidates it, and understand what they're looking for as far as taking profit. So very, very important to know why someone's using this style, or what style they're using, so you can look into it yourself and kind of see, well, the reason why we're taking this risk is, for this reason and that reason. So for me, I trade supply and demand. It's very, very simple, and it doesn't get too complicated. So next question. Do I have a precise desk setup? How many screens do I use? Yes, at home I usually have a dual monitor. I know when people see like 4 monitors, like you think instantly that this guy's this top tier trader. Really, man, monitors are monitors. I mean, it comes down to preference. I made most of my money on a laptop. It really comes down to what the charts tell you, but I don't think it's bad to invest in your setup and to give yourself some inspiration, and to give yourself access to multiple sources of information at once. I don't think that's ever bad. I mean, if you can afford it, do it. But setups are entirely personal, and it really comes down to what are you comfortable with. But I don't ever think there's a bad conclusion from having multiple sources of income that you could see within your peripherals. So yeah, definitely give yourself a nice setup, guys. You wanna come into your office space or your desk space, feeling motivated, feeling optimistic, not feeling gloomy and it's a total preference thing, right? It's how does it feel for you? You're really knowledgeable. Thanks for asserting my question. Anytime, JMac. Any way I can help, I'll be more than happy to. Thanks for your stream. Would you long $6 on Wave? Yeah, let's take a look at it actually. Oh, by the way, my nice little Christmas hat. Thanks to Tante Emma, very talented dude. He even put the Bitcoin logo in the back. How dope is that, guys? It's actually crazy. Sorry. Oh, wow. You guys can't even see that. It's true. You guys are fixed on one screen, so you guys can't even see that. 1 second, guys. Let's take a look at waves. I know someone wants... Oh, wow. I'm looking at it right now. For waves, I want to go on a much further time frame. Whew, this one's tricky, but man, as you can see, like, yeah, this makes sense. Look, because if we zoom into the 5 minute, you see like that, excess supply, excess demand, and if we zoom out onto a 4 hour, well, you kind of see that this red box here is kind of aligned with where we kind of just sold off. And as you look, guys, like clockwork, man, this is a perfect example. Thanks for bringing this up, by the way. Right here is where demand exceeds supply, right? And what did I tell you guys before? We exceed supply, we move up until we meet the next amount of supply. But no buyers here. Nobody's looking to buy up here. So what happened? We sold off into the unfilled order and pushed out again. Incredible, right? And now if we zoom in on the 5 minute, where I put this little red box, pay attention to it because I'm going to move into the 4 hour, is conveniently right where we ran into the latest amount of supply. So now we want this to flip as a demand on a short time frame. It's pretty interesting. But yeah, look, perfect example. Had you taken this trade, so let's make this very, very, very accurate. When it's this thin, guys, I would include the wicks. Just because that price reached down here, so you don't want to get stopped out. You don't want to get filled and stopped out, because this would have filled and stopped you out. Honestly, guys, you want to take the wick or at least the majority of the wicks. Maybe not the final one, but maybe you want to at least include some wicks. So this way you get filled up here, and you give yourself enough reason to fall in, but not be wrong entirely. And this is a very very low cap, so this might be quite a lot of risk. Not even, guys. You could probably even afford the 5% risk. Look, 4% risk on 1% on 1 times leverage. It's a lot more. It's a lot more viable. And you got to take into the factor of how much upside you could potentially see. And this is a 30%, guys. Another 30% behemoth banger. Had you just followed the supply demand strategy. Look at this, a perfect example. It's yeah. You know what? Honestly, whoever asked the question, I'm looking more to bid this area, or at least this. Actually, I feel like this might actually, again, just kind of like someone tried to sell here confidently and just got overwhelmed with buyers. I would actually look to long right there. Long, stop. Long, stop. Don't stick around for this. This already got filled entirely. That's why I moved up. And now someone's probably going to front run. If anything, they might front run this red box here. They might front run this red box with this tiny little, It's a very good example. A very good example. Can I explain the CME gap? This is something I probably don't know how to explain it entirely, but CME is just another market that closes. It has market hours, so it closes, and that gap is just from the time that it's been closed to the time that it's open. Someone could correct me if I'm wrong on this, but I'm pretty sure it's that. Don't take my word for it. Do your own research. I don't know how to answer that question, but I'm pretty sure it just has to do with the times of the market being closed and reopening. That's what the gap is. But I could be wrong. I'm very sorry if I am. Am I only using supply demand strategy? I actually watched most of Sam Seiden's videos, and I don't know why I walked away from it. Like I said, trading is a preference. It has a lot to do with your risk tolerance. It has a lot to do with your personality, and it has a lot to do with the time you have. If you're staring at charts all day, you're gonna be like, well, fuck this, taking too long, and rightfully so. You might be more into scalping. Identify yourself. You guys are coming into a place, how do I explain this the best? I'm gonna go back to sports because I have a lot of history with sports. It takes time to find who you are as a player, whether you're an attacking or an offensive player, or a defensive player, or even more of a keeper. Like it really comes down to what type of trader are you, and this takes a bit of self-reflection, and you can take yourself away from charts. Do you panic easily? Do you have a lot of time on the screens? Chances are, if this is the case for you, scalping might be a thing. You want to be able to react right away. Supply demand is really for someone that's a passive trader that doesn't like to look at charts a lot, really just likes to enjoy his life. Like a lot of people look at trading and stare at charts all day long. I don't like that. I think it takes away from the very essence of what I'm trying to do here, is trying to take my time away from screens. So just basically spending a couple hours a week just identifying places I want to buy is my effective method of trading. But doesn't mean it's the same song and dance for everybody. It's really entirely personal. So I really think you guys need to understand who you are and what works for you. This works for me, and I'm completely comfortable, super comfortable trading this method. It's very very straightforward, to the point, and it doesn't make it complicated, and it doesn't allow much room for contradictions. Honestly, it doesn't. So there's that. It's either it hits or it doesn't. And if it doesn't, meh, I don't care. And that's how you guys should look at it. There's always another opportunity. I don't care if I missed a 20% candle. It happens. It's going to happen a lot. And if you're going to let this dictate your mood, you're going to be a miserable person. You don't want to be miserable in this space. You want to be optimistic. You want to always be on the prowl and attentive and alert for the next opportunity. So don't spend too much time getting sad if trades don't go your way and if things don't hit. But yeah, I definitely only use supply demand. And then when I'm scalping, honestly, when I'm scalping, which is rare, I'm really just playing basic textbook setups, because essentially when volume's there, everybody's on the same board. You know, everybody's playing the same setups. It's very rare. You know, someone just comes in and goes, "Oh, I'm gonna ruin everybody's day and just market sell." You know, it's not gonna happen. Costs money for people to do this, right? A lot of fees. If it's not feasible, they're not gonna do it. Next. I found them incredibly gifted at buying the top. Maybe I should invest in shorts. The idea is Twitch. I don't know if you've been here the entire time, but I'll go over it. Our brains are inverted when we look at these charts. Okay, I'm gonna go to a cleaner one just so you guys can see. Our brains get super inverted when we're buying. Oh my God, look at this complete reversal. It's absolutely insane how strong Bitcoin is, guys. Look at every time you see people are starting to get the trick that, you know, when price go down, number go up. People want to buy these major discounts, and for some reason, dude, you have this in your head, and a lot of people do. I did for a long time. We have it in our heads that when price is bleeding out, we should sell right here, when it couldn't be any more than the fucking opposite. Why are you gonna sell, you know, on a short time frame? Why would you sell 4% down? Ideally, if you wanted to sell, it was gonna be, you know, you wanted to sell here, not after the move has been made. I should go to a bigger time frame just so you guys can see like a real case of panic, right? So here's a good idea, right? You know, like, I could see why people would buy up here, but it's just so risky. You know, I could see why people bought up here. You know, we dumped, we kind of just rounded out, and we thought, oh, you know, we're going to the sky now. You know, the reality is, like, you should have bought here. If you felt comfortable, you should have bought here. But you see, I get it. You know, price falls 6% in 4 hours. It can continue, right? The 30% correction that everybody's instilling in people's heads. I get it, but, you know, if something is bullish, this dip, you should buy. You know, you shouldn't be selling this. Just the same way you shouldn't be buying this. You're at the highest point in this entire rally. Why would you buy here? Just be patient and wait for the next one. At the very least, if you're going to get greedy, buy after a 6% decline. Buy a 6-8% decline. Don't buy at the top hoping that it's just going to break out. Even if it does break out, you're not trading effectively, and eventually you will get burned. You know, and yeah, look, price does recover from the price is recovering from the top right here. But man, can you imagine the emotions you're going through as you see it sink down? You don't know what these 3 candles look like, so why don't buy here? Definitely don't buy here. You know, I'm looking for the next best possible place to enter based on how aggressive this trading method's been. You know, we always tap our EVMAs, and look, now people are getting greedier. They're front running my EVMAs. You know, this is gonna end in disaster eventually. You know, it's someone's gonna get burnt eventually doing this. You know, you want to buy ideal spots. You know, we have this trigger in our head that when something's down 30%, we should sell, and when something's up 40%, well, we should buy. If anything, it has to be the complete opposite. You know, except for when it comes to selling something as scarce as this, you got to be careful understanding like how much are people willing to pay for something truly scarce. Like, selling's a bit different, but buying a 30% off, you definitely want to buy 30% off. Like, buying down here, most people are going to look to start selling down here because they think, oh, bear market. No, the idea is you should be buying that 30% discount. You know, buying the top is a mistake we all make, but that's retail buying. You know, retail buying, it's, you know, institutions, they'll wait 6 months before they get their fill down here. They'll wait 6 months. They'll let everybody trade. They'll let everybody trade this sideways stuff, and they'll just wait to fill down there. And they'll wait. Trust me, they'll wait. They'll wait forever. And so should you. So I understand. I totally get why you buy the top and probably sell the bottom. It's just because our brains are inverted to thinking that 30% down means that it's going to zero, when it couldn't be any further than the truth. This happens a lot in markets. But a 30% down is a gift. It's an honest gift. You know, for something this scarce, it's a gift. Our pivot lines set automatically on TradingView. Mine are with the pivot point standard. They change every 24 hours. Based on the recent highs and lows. It's very effective for me. I like having them for reference. I don't necessarily use them all the time, but you know, using them for reference, as you can see, fucking Pico perfect. Look at that. Look at that. You could trade these very effectively. I think they're awesome. Yeah, that's why I keep them on my screen always. Always good to see. It boils down to knowing when to get in and to get out. Absolutely. You know, it's people buying and selling. This is a market. People are buying and selling. There's no fancy way to put it. You know, it's as simple as it sounds. It really is. Can I watch this video again and where? Yeah, it's I clicked record, or at least I hope I did. Yeah, I did. You should be able to watch this at your own discretion later. What are the MAs shown on my chart? These are coded. They're slightly different than the ones that you'll see on TradingView. I coded them a bit differently. Not me, obviously. I'm not that much of a gigabrain, but I had someone that made some adjustments to a script, and they follow pretty much the volume and the order books. It's moving averages mixed with the volume as confluence. So it's a nice little tool. It helps me understand a lot. It really does, and it helps identify when a trend might be changing. But as you can see, I was saying this in my my previous stream that, you know, most of the time, the second we fall under these things, it's a buy. You didn't get much error, you didn't get much of a chance to buy under here, but it's a buy every time. More often than not, you'll be right. If ever that falls under there, you know what to buy. Don't start saying, oh, I gotta sell underneath. No, you should buy this. It's favorable to the upside. You know. Next question. Many monitors are good for scalpers, I think. Yes, for scalpers, many monitors, you need eyes. You need eyes and ADD. Like, you need Adderall, man, you really need Adderall to focus like that. I can't do it. I don't know what it is. I get carried away in a chess game, and before you know it, I'm stopped out on 6 trades. So, ridiculous. How did I determine the supply zone from that retest? I determined supply zones just based on the price action. And price action is when you got a lot of sideways. What's a good example? I'm looking for one. Just bear with me, please. What would be a good supply zone I could show you guys? Maybe Bitcoin, because it has the most solidified price action. If you want to look at what, you know, distribution looks like, it'll look like this right here, where we keep trying to push out, big candle sells us down, keep trying to push out, big candle sell us down, keep trying to push out one fucking final time, pushes us down. We try to break out one last time, there's just way too many sellers. So supply looks like a lot of sideways action followed by failed tests to the high, followed by a significant push back down. But as you can see, this was the never 9K again days, which, as you can see, did not spend much time under my EVMAs, instantly marked right back up. You know, retested the blue line, and the rest is history. So yeah, supply zones are often decided by whenever we keep trying to break out and just keep getting sold on, until there's no more buyers. So that's what supply looks like. And then it's, you know, Bitcoin's a bit more of a special case because it's this constant demand. And as you can see, the constant demand just eventually breaks to the upside. There's just not enough selling because there's just such scarce real supply and so much constant demand that eventually shorters just get blown out. In longevity, shorters really do not have a good time. You know, you got to cover quickly when you're trading something scarce like Bitcoin. CME was the first institutional futures to open, like Rego says, with opening hours. It basically opened on the last cycle, bang on 20K. And yeah, that's what I thought. It has to do with market hours, sorry. Exactly, from when it closes till when it opens. So I was pretty much right. What are the best time frames for supply demand? 4 hour, 1 day. I think you could start bleeding into 1 hour, 2 hour, 3 hour, 4 hour. I'm not a good fan. I'm not a big fan of 1 hour, 2 hour, 3 hours, but 4 hours is nice. 4 hours had some nice data. There's always another trade. Always another trade. Don't ever think that there isn't. As you could see, yesterday was bombshells. Everything went supernova. You know, you're never gonna, like, there's so many trades, guys. Don't fall for these stupid traps where you think everything's running away. You know, it's it's the biggest misconception ever. Don't fall for this. Do I think supply demand would work most on on the shit coins? Small market cap, yes. I think that's where you could see a big relief bounce because low caps are very illiquid, so big orders will go unfilled. I think supply demand works the best for short term trades. Definitely, yeah. I like I said, trades can go wrong, and you should always prepare yourself for the downside. And it's most traders I know 30-40% win rates, and they're profitable. Now why is this? Because their risk does not outweigh their profitable trades, and that's very, very important. They're wrong very early, but when they're right, and that's what matters. More CME talks. Wow, I'm really behind on these. Do I have IG? My IG, I like to stay a bit personal. I mean, I'm pretty sure everybody kind of knows who I am if they do enough research. I was in music for a very long time, so it's not hard to find me. Yeah, so I'm kind of doxxed, but like I'm not. But no real Instagram or anything of the sort for my. I just have a Twitter, pretty much. Can we buy this script? No, you cannot. It's a proprietary blend for another group I have, traders with whales and bigger players, and I want to respect their methods. Jack, anything I could do, man. Just trying to provide as much value as I can to you guys. I want you guys to get it, and I want you guys to make money. I definitely don't want people feeling lost or that there's no or that they're just blindly following and not feeling like they're learning anything. You definitely wanna learn. You definitely want to know why you're taking a trade. I think it's very important, and it's also going to spark an interest, right? You guys are going to want to see and eventually go and do your own trades, and you can't do that if you don't know what you're looking for. So yeah, I definitely want people to understand what they're looking at. Support resistance is very, very outdated. It's very, very laggy. It's not that it doesn't work. It's just you're buying where everybody's buying. Everybody sees support. Everybody sees resistance. But not everybody's seeing supply and demand. For some people, support would probably look a lot like this. Supply and demand is a lot more... how do I say it? Supply and demand is a lot more immediate price action. Support is something that well, we're gonna go sideways on support before going up, and I personally don't think I don't want to be where, like, I can't explain it. It's support is something everybody's looking at, and I mean, they're kind of the same. It's just supply and demand zones are a lot more immediate price action. It's immediate price action. It's not, 12 hours of going sideways before moving up. It's really we wick into the order and we're able to close easily at a 5-6%, 8% profit, which is exactly what you want. So yeah, supply demand, support, resistance, kind of the same thing. Only it's a lot more decisive. You have your answer right away, just to say. And a lot of people, like, I'll give you an example, right? Because a lot of whales like to play this method where they know people are long here. They know people's stops are right here. So they're gonna do it on purpose to run everybody's stops and wick all the way deep until you can no longer take it, and just miss the entire move, or at least get stopped out of the entire move and then just kind of go sideways before moving up. Like, you want to be where orders are, big orders that show on the clearly, decisively show that they did not get filled here. They did not get filled here, and chances are price will move up before you even see the support. So you want to capitalize on that, right? You could wait for support, you could wait for resistance. I just think everybody's looking at them, and people play them. They play against them a lot because they know a lot of people are looking at them. Money printer, go brr. I'm a bit parched. I couldn't do it. But yeah, honestly, guys, I think I think we got a lot covered today. It's almost running at an hour and a half, so I'm gonna end it in the next 3 minutes. So if you guys have any other questions that I can answer quickly, let's hear them. Do I ever use Trading Light? Yeah, I do. I do. I mean, we have bots. We have bots in another group that I have. I'm gonna speak to Bonanza to see if we can get one uploaded, where you can at least see where big buyers or where big order books are. So yeah, I definitely use Trading Light. If it's within your budget, it's a good telltale. Excuse me, especially for crypto. It's very important to know where your bids are or where big walls are at. So yeah. All right. All right, guys. So look, this is my first Twitch stream, and I think we got a lot covered. I think we got a lot covered, and the next one I think is going to be more exclusive. It's going to be a lot more. I'm going to have more of a lesson plan in place instead of just winging it and talking about it. I'm definitely going to create more of like a slide PowerPoint sort of thing, so you guys can see more of a visual instead of just watching my mouse go up and down, right? So yeah, stay tuned for next time, guys. We're gonna keep this more on a weekly basis, at least once a week. We're gonna switch the time zones up, so make sure everybody has a chance to see these. All right, guys. So once again, thank you guys so much for joining. I love doing this stuff. It's been a blast. It really is. So honestly, I'll see you guys next time. And if you guys have any questions, as always, don't be shy to send me a message on Discord. It might take me a bit of time, but I promise I'll get back to you. And I leave you guys with that. Thanks a lot, guys.